Hi, my name's Bhavna Sadaragani. I'm Director at S&P Dow Jones Indices. Today I have with me Tim Edwards, our Managing Director and Global Head of Index Investment Strategy, and Sarju Gudka, Director of Derivative Sales at Cboe. And today we're here to talk about the S&P 500 and what it means for the Middle East. Tim, I'm going to start with you. Can you give us some insights into the S&P 500 as a starting point and also the ecosystem of the S&P 500?
Sure. Along with the Dow, the S&P 500 might be the most famous index in the world. It is an index of 500 large US companies that has, in its current form, a history dating back to 1957, when it was the first index to go, as it were, in those days, to go electronic, so to trade intraday. Today, there are index funds, ETFs, futures, options, and more tied to the S&P 500, offering people with the ability to invest, benchmark, trade, manage risk, and seek goals all around the world. It trades nearly 24 hours a day, and in terms of a single benchmark, which is kind of paramount in terms of benchmarking, investing, and trading, probably the S&P 500 is that one that has that universal applicability.
Great. When we come to you, Sarju, can you tell us about the derivatives market, tracking the S&P 500 and how it's grown globally and what's been driving the growth as well?
So I think it comes down to the deep liquidity pool, the number of various types of participants that actually trade within the market. So obviously within the US, you have a number of institutional customers and you have a number of professional traders, and then you have a thriving retail trading community that all use these products. Then internationally, again, institutions, pension funds, hedge funds all tend to use these products, A, because of the relevance of the US market towards global portfolios, and B, because of the deep liquidity pool that they can access.
Great. And Tim, I'm going to come back to you. When we talk about the 500, we can't not talk about VIX. Can you tell me a bit more about VIX and the role it plays in the market today?
Sure. So VIX, also give it its full name, the Cboe Volatility Index, is kind of exemplary of the partnership that's existed between S&P Dow Jones Indices and its partners like exchanges. So the first ever index option was traded on Cboe. And it wasn't too long after the sort of a genuine liquidity pool established around that the smart folks at Cboe built the VIX, right? Or the Cboe Volatility Index. And what it does is it essentially uses a publicly available methodology to interpret or encode the prices of all the different S&P 500 options as traded on Cboe into a single number that gets the market expectation or the market price for volatility of the S&P 500 over the next 30 days. The reason it's so important as an indicator is essentially it condenses a huge amount of trading and market participants into a single number that essentially gives you, here's the cost for ensuring the S&P 500 portfolio as expressed by the prices of options.
Great. That's so interesting. Sarju, you talked about the deep liquidity of the markets. Can you tell us how Cboe is contributing to this and what it's doing to help grow this, and very specifically around the application of indices?
Yeah. I think as an exchange, we have a unique position in the market to be able to, democratize access into the market and innovate and iterate. So by innovation, we look to what market participants want to do and try and find an efficient mechanism for which they can do this, whether that's risk transfer, whether that's applying investment thesis or ways of accessing alpha, for example, developing a dispersion trading product. In terms of iteration, we look to the market for what it is they're doing more of, and we try and angle our new product lineup to give them more of the same. So a great example of that is the listing of more daily expiry options. We launched Tuesday, Thursday expiries in the S&P in May 22, and what that led to is a rapid increase in the use of these daily options for a number of different uses by a number of different participants all across that term structure, whether it's hedging, whether it's taking position around event risk, with yield harvesting, and you have a thriving ecosystem of participants that use these products and are now using them even more.
Great. Well, gentlemen, it's so insightful to learn about the S&P 500 and what VIX and how Cboe is using it. But we need to bring it back to the local market and the Middle East. And Tim, I'm going to start with you. Can you tell me what the importance of the 500 is for the local market?
Sure. Look, one of the most powerful tools available to investors in the Middle East and around the world is diversification. Diversification and participation. In the Middle Eastern region, here in Dubai, but also in other countries in the region, a couple of things are true. First of all, there has recently been some very strong, exciting capital development in terms of smaller new companies in the information technology and the healthcare sector.
Yeah.
But still, as of right now, that sector is very small. The majority of the Middle Eastern equity markets are taken up by, are dominated by traditional financial companies, materials companies, energy companies, which means that in terms of scale, the opportunities for growth markets, for technology, for communication services, healthcare is quite limited. What the S&P 500 does is in a single index, it wraps up companies with global reputations, with global sales. The biggest names in there are companies that are deeply familiar in terms of brand, Apple, Microsoft, Nvidia, Tesla, and so on. And it's that participation in the world's largest and, in some senses, most dynamic equity market, but also the transparency that comes with a broadly scrutinized and recognized index, i.e. it's an index that not only there are thousands of people checking what's going on every day, it's very tangible. You typically report what happens in the evening news.
Okay, great. And if I come back to you, Sarju, if we look at it from an exchange perspective, why is the S&P 500 relevant for the local market?
I think because local markets themselves, the investors in the local market and the institutional funds have huge amounts of capital and assets to deploy, clearly more than they can use within the local market. And so they look to other capital markets to deploy this. And the US equity market, being one of the largest and deepest liquid ecosystems, is a natural place for some of that capital to go. At the same time, in terms of access, one of the things that we've done to help this is to democratize access by giving more access outside of our US trading hours by turning on 24/5 trading to allow investors around the globe to be able to access our ecosystem outside of US market hours.
Great. Well, thank you both for your insights today. That was really insightful, and it's been a pleasure to have you.
Thanks.